Hey everyone, welcome to Bitcoin and Crypto News. I hope you're having a great day. Today is Monday, July 26th, 2021, and thank you for joining me for today's video. We're going to take a look at some of the current price action along with the top news stories in the space. So without any further ado, let's get into the prices. So after what has been a very rocky 3-month span since the price of Bitcoin has dropped over 50% since the end of May and has been basically trading sideways ever since, it is starting to look like the bears may have finally been defeated as Bitcoin's price increased yesterday, topping out at near $40,000 and is currently trading at $39,095. Bitcoin is also up 13.4% over the last 24 hours, followed by Ethereum, which is up 9.9%. And looking at the top 10 coins, all of them are in the green. And as we scroll down even lower, some of the biggest winners for the day in the top 100 are Chainlink, up 19.4%, Matic, up 19.7%, VeChain, up 21.2%, we have OKB, up 17.1%, Aave, up 18.8%, AMP is up a whopping 30.2%. So as you can see, the market has really turned green. And over the last 7 days, Bitcoin is up 22%. All right, and that's enough of the price action. Let's get into the news. First up, let's hop over to the Twitter account of Willy Woo. Willy is a must follow for anyone in the space, who pointed out late yesterday that around $1 billion worth of futures were liquidated within a 12-hour span. As more leverage has entered the system, these gigantic liquidations have become all too common, whether it's to the upside or a drawdown in price. Looking at the exchanges with the most liquidations, Bybit saw $413 million, followed by Huobi and OKX. These three exchanges accounted for nearly 80% of the $1.06 billion worth of liquidations. Leverage can be one of the most helpful things when trading, but very few traders are actually profitable and will outperform those who simply buy and hold. Although it has the potential benefit of giving you a large return, liquidations can be absolutely destructive to traders, who can wipe out their entire positions or portfolio if they are not careful or properly educated. Platforms offering 20, 50, or even 100x, in my opinion, is simply too much for your average trader. Far too many traders get liquidated when prices move even slightly, let alone when we see these large movements in price, which ends up being more volatile than it would have been if there wasn't leverage in the market, which is caused by these liquidations providing almost a feedback loop. As the price falls, more people get liquidated, which causes the price to fall more as those people are liquidated and have to sell off, which causes more people to be liquidated and continues the price falling down. And the inverse applies for when the price increases to those who are short on the market. And we're starting to see companies address these concerns, which leads us to our next story. Binance, who is seemingly in the crosshairs of many countries and regulators around the world, announced that it is going to cut its leverage limit to 20x, and this comes one day after FTX announced it will be doing the same. This will see the maximum leverage reduced from 100x down to 20x. CEO of Binance, Changpeng Zhao, didn't state the reasoning behind the decision, but said that upcoming changes for existing users were, in quotes, in the interest of consumer protection. Although some people claim that leverage has a smaller impact on the market than what is being reported, excessive leverage is definitely not something everybody should play with. Since I'm a long-term investor not looking to make a quick buck, I completely stay away from leverage. I simply dollar cost average and hold. But leverage trading is clearly a hot button topic with regulators and governments around the world, so the move to decrease the maximum leverage by FTX and Binance cannot be a complete surprise as they try to avoid any more attention than they're already garnering from these governments and regulators like the SEC. Sticking with leverage and futures, one of the most interesting parts of the current Bitcoin market dynamic has been the Bitcoin future expirations and their impact on the price. Throughout the earlier part of the year, you could almost set your watch to a few days before the futures were set to expire each month and expect a drawdown, which would quickly be swallowed up a few days later, and the market would continue its ascent up, eventually reaching $64,000. So something that has been on my radar is that the Bitcoin option market could see 5 billion expiries in July as market speculation is on the rise. As the market has continued to become more and more bearish, people continue to go short on Bitcoin and crypto, which explains the volatility price movement yesterday. So it is certainly something to watch as we approach the July 30th deadline when a majority of the futures are set to expire. A key price to watch out for is $35,000, which is the max pain point, which is a commonly used term in the space that is essentially a theory that says the market will gravitate towards the price that offers the maximum pain to the buyers of options. This is caused by sellers, who are usually institutions, high net worth investors, or experienced traders with very high liquidity and capital that will try and push the price towards that max pain point by buying assets on the spot market or future markets when the options are near their expiration date. And as you can see, looking at the Fear and Greed Index, Despite the increase of over 20% over the last 7 days and nearly 15% in the last 24 hours, the market sentiment has not really changed that much. The market is still fearful, although it is being viewed more positively than it was last week, where the Fear and Greed Index was extremely fearful. If the price of Bitcoin can prove to stabilize near $40,000 and remain above the $35,000 price point to close out July, we should see sentiment in the space continue to improve. Although we are certainly not out of the woods yet, we do find ourselves above the 50-day moving average for the first time since the sell-off in May. Looking at the daily Bitcoin chart, we can see yesterday that we broke above the 50-day moving average, which is the green line on the chart. And we were actually pretty close to reaching the 100-day moving average, which is currently trading around $41,500. Those are the two price levels that I'm looking at before I'm making any judgment as to whether the market has broken out of the bearish trend. So hopefully over the next couple of days, we can either stabilize the 50-day moving average as a new line of support, or hopefully we break above the 100 and then can create that as support. But as I've said before, and will say a million more times, time is on our side. We are still so early to Bitcoin and the space as a whole. Sometimes you just need to put your head down and ignore the outside noise. We zoom out a little bit back to around April and May. This looks like one hell of a drop-off and honestly looks pretty bearish. But as you continue to zoom out, you see how far the price has really come. And I'm not really one for technical analysis. Personally, I think the most important thing is the ability to zoom out. Oftentimes, that can be the best type of technical analysis. The super interesting story is in regards to Bitcoin IRAs. I recently released a video where I went over Roth IRAs and compared it to a traditional IRA, as well as went over the pros and cons, and also tied it into Bitcoin and crypto. So if you haven't had a chance, be sure to click the link above and check that video out as well. This news article shows that one platform, Bitcoin IRA, has seen an increase of 24,900% in transactions over the last 4 years, as well as a 14,185% increase in users, going from 700 accounts back in 2017 to over 100,000 users today. As I spoke in the prior video about Roth IRA accounts, it is an incredible way to preserve the value of your investment, because at the end of the day, it is not how much money you make, but rather how much of it you keep. And with the potential that I believe is in the crypto space to make life-altering wealth from Bitcoin and crypto, a cryptocurrency Roth IRA should be on everybody's radar. Personally, I use iTrust Capital, and if you want to check them out, there is a referral link down below. I will also include a link to check out Bitcoin IRA, which this particular article is about. Sticking with everybody's favorite crypto topic, we're going to take a look at taxes. So a new rule is coming to Korea that could permit the Korean government to seize tax evaders' cryptocurrency. South Korean legislators proposed to revise tax code so that tax authorities would be able to seize tax evaders' crypto assets directly from their digital wallets. Korea has come out to be one of the most harsh countries in regards to its stance on cryptocurrencies. They are poised to implement a 20% tax on Bitcoin and other cryptocurrency profits starting January 1st of 2022. A move that has faced significant pushback from the industry. The new regime will charge a 20% tax on all crypto trading capital gains over $2,300. In April, Seoul tax authorities seized $22 million in crypto from individuals and company executives who owed outstanding taxes. As crypto continues to grow and becomes more mainstream, it is clear that governments are looking at all of their options as to how they can regulate and tax these assets. Some countries, on the other hand, seem to be more welcoming to crypto as a whole, and with the ability to leave a country and bring your coins with you, with nothing on your person, and just having to remember your seed phrase in your head, or writing it down on a piece of paper that you can easily bring with you. It'll be very interesting to see if the governments that overstep and become too oppressive will cause their citizens to relocate to a more friendly state or country. Already we've seen many U.S. investors move to places like Puerto Rico or the Cayman Islands to escape the large tax burden that the federal government and states place on its citizens. With a tax rate as high as 20% being imposed in Korea next year, I'm sure that there are many crypto enthusiasts who are already trying to figure out where they will be moving to at the start of next year. Okay, and that's all the news I have for you today. Before we head out, let's jump back over to CoinGecko and see what's going on with the price of Bitcoin. So since we started recording, Bitcoin is up just about $150, currently trading at $39,240. Ethereum is $2,363, and overall, the market just continues to climb and inch slowly up. Hopefully that trend will continue and we'll shortly pass $40,000 and continue to make our climb back up to new all-time highs. Thanks again for joining me today. I really appreciate you taking time out of your day to spend it with me. If you haven't already, please hit the thumbs up and subscribe. It really helps the video get out to more people and helps the channel grow. Thanks again, and have a great Monday.